Today, Bitcoin falls as low as the $57,000 level. NFT marketplace OpenSea says it received a Wells notice from the SEC. And Bitfarms CEO Ben Gagnon explains what prompted the Bitcoin miner to acquire competitor Stronghold Digital Mining. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrency is sliding for a fourth consecutive day today as investors brace for NVIDIA earnings. Bitcoin dropped 4.3% to just above $59,000 by noon Eastern. At one point, it fell as low as about $57,000. Ether fell more than 3% to $24.96, and Cardano lost 3% as the blockchain prepares for its biggest upgrade in 2 years. The Chang hard fork upgrade was initially supposed to take place this week, but has been pushed back to September 1st so that some exchanges, including Binance, could prepare. That's according to a post on X from Cardano co-founder Charles Hoskinson. Now, at one point yesterday evening, Bitcoin lost 6% in the span of an hour. The cause of the sudden drop wasn't immediately clear, but investors pointed to liquidations in the futures market, skittishness around NVIDIA's upcoming earnings report after the bell today, and ongoing sell pressure from the Mt. Gox distributions and U.S. government holdings. Speaking on CNBC's Squawk Box this morning, Anthony Pompliano, founder and CEO of Professional Capital Management, weighed in on Bitcoin's dip below $60,000.
Well, I think it's just sideways summer, right? You know, people kind of saw this huge run up after the Bitcoin ETF got approved earlier this year. A lot of capital flew into that, both retail and some institutional. And when the summer hit, people, I think, kind of just went away. And so as we've traded sideways, there has been volatility. But I do think that if you look at the historical kind of bull run cycles, kind of end of Q3 into Q4 is when things start to pick up, and you'll start to see, kind of the asset price rise from there.
August is a typically quiet month for crypto and risk assets at large, but this August has been particularly volatile. Cryptocurrencies, however, are not strangers to big pullbacks in bull markets, and Bitcoin is still safely in the range it's been sitting in since April, between $55,000 and $70,000. Pompliano also argued this morning that Bitcoin's volatility is part of what draws investors.
If you compare, Bitcoin to maybe something like gold, they're both sound money principles, but Bitcoin's 1 year volatility is 0.35, gold's is 0.09. And so that volatility is part of what draws people, that they want the upside of something like Bitcoin, but they still want the sound money principle.
Okay, let's talk about the top stories. NFT marketplace OpenSea says it received a Wells notice from the SEC. The company's CEO, Devin Finzer, took to X, saying the agency is threatening to sue and claims that NFTs on OpenSea's platform are securities. A Wells notice is a warning from the SEC that often precedes a lawsuit. This follows a string of Wells notices received by Web3 companies this year, including Consensus and Uniswap in April and Robinhood Crypto in May. Consensus was then sued by the regulator in late June. Of course, unlike OpenSea, these aren't platforms that focus on NFTs, but the SEC has targeted specific projects in the past, including Mila Kunis-backed Stoner Cats. Finzer's post argues that NFTs are, quote, fundamentally creative goods, and compares them to art, video game items, and event tickets, and says they should not be regulated in the same way as collateralized debt obligations. He also announced that OpenSea is pledging $5 million toward legal fees to help NFT creators and devs that receive a Wells notice. We reached out to the SEC, and a spokesperson told us the agency does not comment on the existence or non-existence of a possible investigation. Next, a new report reveals that institutional investors continue to ramp up digital asset allocations. This report, supported by OKX Institutional, points to a 2023 survey which revealed that 69% of institutional investors anticipated increasing their allocations to digital assets in the next 2 to 3 years. They also expect crypto holdings to constitute more than 7% of their portfolios by 2027. The report notes that currently, on average, digital asset allocations in institutional portfolios ranges from 1% to 5%, depending on risk appetite. It also shows that the positioning of digital assets within institutional portfolios has been focused on trading cryptocurrencies, with Bitcoin and Ether representing the largest investment avenues. However, the report goes on to note that institutional investors are showing greater optimism around digital assets due to the expanding availability of a wider range of investment vehicles, including spot crypto ETFs, stablecoins, and crypto derivatives. The research also reveals that the projected value of tokenized assets is expected to surpass $10 trillion by the end of the decade. Despite these findings, there are still challenges ahead, like the lack of regulatory clarity. The report notes that risk management is a crucial step for digital asset allocation to become entrenched in institutional portfolios. All right, turning to Bitcoin mining for our main story. Global Bitcoin miner Bitfarms announced yesterday that it has assumed control of its first U.S. mega site, which marks a significant expansion in its power capacity and mining operations. Bitfarms' newest data center is located in Sharon, Pennsylvania, and the site has access of up to 120 megawatts of power capacity. This development comes 1 week after Bitfarms announced it plans to acquire competitor Stronghold Digital Mining. Crypto World's Talia Kaplan spoke with Bitfarms' new CEO, Ben Gagnon, about the acquisition and his plans for the Bitcoin mining company now that he's leading the firm.
Last week, we learned that after 3 years of merger discussions, Bitfarms entered into an agreement to acquire competitor Stronghold Digital Mining. Bitfarms says the merger will cost around $125 million in stock and around another $50 million of debt. The deal is expected to close in Q1 of next year after approval from regulators. What was behind the decision to join forces with Stronghold Digital? I'm sure strengthening your U.S. footprint played into the move, but did the Bitcoin halving back in April have anything to do with it?
Yeah, so there's a lot of things that came into play here. Definitely strengthening our U.S. exposure is a big part. We're a very international Bitcoin miner. We've got over 12 sites in 4 different countries and 3 languages. But really, U.S. has been the smallest part of our portfolio. So with this one transaction, we're able to increase the size of our portfolio next year by almost 50%. We're able to rebalance our energy portfolio towards the United States. So next year, we're going to have about 65% in North America and almost half of that in the U.S. And we're able to get a huge growth pipeline, both in the short term as well as organic growth opportunities over the next couple of years to continue expanding in the United States. So, one transaction really ticked a lot of boxes and opportunities for us.
It sounds like it. And did the Bitcoin halving back in April play a role?
So this is something we've been working on for the last 3 years. The Bitcoin halving certainly has compressed margins for everyone, but for a company like Bitfarms, in order to be successful, we have to be thinking, so many years in advance. So the reality is that for this last halving, we were getting ready for it back in 2020. And if anything, this transaction is more geared around getting ready for the next halving in 2028, because that's how forward thinking you have to be in order to survive in this space.
Now, of course, this deal comes as M&A activity in the Bitcoin mining space remains red hot. There have been other deals recently, including between Core Scientific and AI infrastructure startup CoreWeave, as we've seen the growing trend of Bitcoin miners turning to artificial intelligence to diversify revenue streams, given it became a lot less profitable to mine Bitcoin post-halving. What do you think about this trend? I understand Bitfarms plans to move into the AI space as well. Was your acquisition of Stronghold pursued with the intent of integrating high-performance computing and AI?
Yes, so the high-performance computing trend and the AI trend is a very powerful driver right now. What we're looking at is how do we increase the value of our energy portfolio and how do we maximize utility of all of our assets? And certainly we think HPC and AI is a great way for us to continue to expand our presence in the data center space and continue to get the best leverage out of everything that we have. So when we're looking at growth opportunities in the United States, we're looking at, what are the opportunities that are not only good for Bitcoin mining, but are also good for HPC and AI. And with the Stronghold transaction, what we've unlocked is the potential for something really groundbreaking. The ability to create a merged HPC, AI, and Bitcoin mining data center, which will enable us to save a lot of money in terms of the CapEx build out for the HPC AI data center, and also drive a lot better economics at the site and actually drive a more environmentally friendly HPC data center by removing the diesel generating components that usually are in an HPC data center for redundancy.
What other steps are you taking to maximize revenue and profit following the halving? What can people expect? Perhaps more acquisitions?
So we've been upgrading all of our miners this year. We announced a big transformative fleet upgrade at the end of last year. So we've ordered just shy of 88,000 miners that are going to be deployed this year. About half of those have already been deployed in existing facilities. The other half is being deployed, throughout the remainder of this year. As we look towards next year, what we're going to be doing is continuing to build on the success that we've had this year, securing more miners to fill out the build out at Stronghold, as well as our recent Sharon, Pennsylvania site, and trying to figure out how we incorporate HPC and AI into our portfolio of energy assets for an end of 2025 or a beginning of 2026 timeline. We think that timeline really aligns well with what we anticipate to be the top of the Bitcoin bull market cycle. And that's the time when we want to have diversification into an alternative revenue stream like HPC and AI.
Now, of course, Bitfarms has been pushing back on attempts to make it the target of an acquisition as well, rejecting a $950 million takeover offer from Riot, which was unsolicited. As of 2 weeks ago, Riot claims to own a nearly 19% stake of Bitfarms. Where does everything stand with Riot right now? What's the latest there? And would you ever be open to a full takeover offer from the firm?
We as a company are always open to any opportunity that's going to maximize value for shareholders. And so when Riot first came to us a couple of months ago, we started a strategic alternatives review process. We set up a special committee at the board, and we looked at all sorts of different opportunities. We ended that strategic alternatives review process a few weeks ago when we basically came to a handshake agreement here with Stronghold in order to facilitate this agreement. Because at that point, the compelling economics of this transaction and the pro forma merged company are so compelling that that's what we decided to move forward with. And the board unanimously decided that was the best way to maximize value for all shareholders. We believe that this deal is really transformative for the company and for all of our shareholders, not only for what this enables for our immediate growth and the combined aspects of this company, but what this unlocks for our growth potential next year and the years to come. This is a pivotal transaction where we've really committed to diversifying beyond Bitcoin mining itself, not in a way that's going to distract from Bitcoin mining, but in a way that's going to make us better Bitcoin miners. And so, in addition to expanding our US portfolio, with this one transaction, we've also been able to diversify into energy generation, get huge access to energy trading in the United States' largest electricity market, PJM, been able to integrate heat recycling, waste mitigation, as well as HPC and AI into our portfolio. So this has been a very transformative transaction, which is going to be great for all shareholders.
You'll be able to check out Gagnon's full interview over at cnbc.com/cryptoworld. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.